Capital expenditure. It is the money spent by the government or company on the development of machinery, equipment, building, health facilities, education, etc. It also includes the expenditure incurred on acquiring fixed assets like land and investment by the government that gives profits or dividends in future. It is associated with investment or development spending, where expenditure has benefits extending years into the future. Importance. It leads to the creation of assets that are long-term in nature and allow the economy to generate revenue for many years by adding or improving production facilities and boosting operational efficiency. It also increases labor participation, takes stock of the economy and raises its capacity to produce more in future. Along with the creation of assets, repayment of loans is also a capital expenditure as it reduces liability. Revenue expenditure. Revenue expenditures are short-term expenses that are used in the current period or within a year. Revenue expenditures are essentially the same as operating expenses in which they cover the ongoing operational expenses, OPEX, of running a business. Ordinary repair and maintenance costs are also included in revenue expenditures since they are required to keep an asset in working order without significantly increasing or extending the asset's useful life. Repairs and routine maintenance, as well as repainting and renewal costs, are all revenue expenses tied to existing assets. In contrast to the one-time nature of most capital expenditures, revenue expenditures might be termed recurrent. The amount of money spent by the government neither develops physical or financial assets nor reduces the government's obligation. The revenue expenditure is related to the government's day-to-day operations. Revenue expenditures include expenses for the day-to-day operations of government departments and various services, interest costs on government debt, subsidies, and so on.